Hello and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, we are in the middle of the week, Wednesday morning, a pretty rainy morning here in Mumbai. But the good part is that in terms of the market movement and the price action, we've seen the Nifty gaining for 4 straight days. Hopefully we will be looking at a fifth straight day of gains. But if you look at the global cues, not very encouraging this morning. We had a mixed close on Wall Street. Asian markets were also, trading lower. In fact, the Nikkei has retreated from record levels. In fact, exports data disappointed in Japan, and that's why we saw the Nikkei tumbling over 1.5%. Kospi also had a rub-off impact. That market was also in the red. So yes, Asian markets downbeat. U.S. futures were flat with a negative bias. GIFT Nifty also hinting at a mildly lower start. But given the kind of momentum we've seen in the market in the last four sessions, one would really hope that we could clock in a fifth straight day of gains ahead of the weekly expiry tomorrow. So yes, 25,000, that's a crucial level that everybody is waiting for the index to cross on a closing basis. Yesterday as well, we crossed that level, but we failed to end above that crucial level. So 25,000, that will be watched out for today as well. Lots to watch out for. Gaming stocks will be in focus, given the fact that a bill to prohibit real money online gaming may be tabled in the parliament today. We'll discuss gaming stocks as well on the stock. Also in focus will be HAL, given the fact that it has won an order from the government worth over 60,000 crore rupees. So HAL will be the other one that will be in focus. And also in focus will be the telecom pack once again. Yesterday, we had a news flow that Jio has discontinued its base plan of 199 rupees and 249 rupees online. Bharti Airtel has also followed suit. It has discontinued its 1 GB per data plan. So we'll talk about telecom stocks as well. So yes, lots to watch out for. All your stock related queries will also be in focus, so keep them coming in on our live feed. We'll get them addressed as well. But of course, before we move any further, let's take a look at the top headlines at this hour. Well, Wall Street ended mixed yesterday, with the Dow eking out slim gains, but it was the Nasdaq that shaved off over 1%, given the fact that we saw weakness in shares of Nvidia and the entire technology pack, so to say. But Asian markets also trading lower, tracking Wall Street decline, and the GIFT Nifty is hinting at a mildly lower start. But let's see if we can defy those cues and trade higher in the session today. Crude oil prices fall as talks to end Russia's invasion of Ukraine could ease sanctions. Meanwhile, gold prices take a dip as well as investors await commentary from Fed's Jackson Hole conference on Friday. Online gaming companies brace for a body blow. The cabinet approves the much awaited legislation. The bill, which may be tabled in the parliament today, is likely to ban online money games and prohibit any fund transfer or advertisements related to it. India and China decide to resume direct flights and border trade following key talks between External Affairs Minister S. Jaishankar, NSA Ajit Doval, and Chinese Foreign Minister Wang Yi. And heavy rains and high-speed winds continue to batter Mumbai. Red alert issued for Thane, Raigad, and Pune. Orange alert issued for Mumbai, Palghar, and Ratnagiri. Multiple local trains on the western line also stand cancelled. Well, those were all the top stories this morning, but just about 9 or 8 minutes to go for the markets to open. Just want to take you through a short recap of what really transpired yesterday. We had a very quiet start yesterday, couple of hours. First couple of hours were very range bound, but the market did manage to pick up steam. And the Nifty, made a dash at the 25,000 level once again, but we failed to close above that level. Reliance Industries, that was the top contributor. It was up somewhere around 3% or thereabouts, tracking the, geo-related tariff news. We had autos rising once again. Reports were suggesting that China would be looking to lift rare earth magnet curbs, and that really got the entire auto universe rallying in trade, not just the frontline names. We also have had auto ancillary names like Sona BLW, Samvardhana, all of these names clocking in solid rally. Remember, day before yesterday, also autos were in top gear on the back of GST rate rationalization news. So yes, auto pack, that's been one pocket that has been leading from the front over the last two sessions or so. In terms of the other pockets that are doing well, new age companies continue to do well. The likes of Eternal, Paytm, those were among the top gainers. Textile stocks were also in focus. The likes of Gokuldas Exports, Raymond, etc. Given the fact that the government has removed the duty on cotton imports till about 30th of September, so that came as a booster. PNB Housing saw good traction given the fact that it exited F&O ban. Today, PG Electroplast exits the F&O ban list as well, so that stock will also be in focus. FMCG, consumer durables continue to see good gains. In terms of fund flows, foreign investors who had turned buyers for one session once again turned into sellers, but they sold somewhere around 630 crore rupees or thereabouts in the cash market. DII buying continues, 2,200 crore rupees worth of stocks bought in the cash market. Let's also take a look at the F&O queues then. I was talking about PG Electroplast that exits the F&O ban list today. But RBL Bank and Titagarh continue to remain in the F&O ban. And if we talk about the put call ratio for the Nifty, that climbed to 1.14 vis-a-vis 1 in the previous session. So all in all, that's the whole texture of the market. To understand what to expect today, and of course in the run-up to weekly expiry as well. Let me bring on board Jay Thakkar of ICICI Securities. Jay, lovely chatting with you. Hope you're safe. Extremely heavy rains in Mumbai and waterlogging everywhere. But nothing to complain really. We've seen a deluge of gains on the last week as well for the last four sessions. What's your sense? We failed to hold our heads above that 25,000 mark. Do you think today would be the day in run up to the weekly expiry that we can see a close above that crucial level?
Good morning to you, Nandita. Thanks for having me on the show. And yes, kind of monsoon. I mean, it reminds me of many years ago when we had that kind of waterlogging on 26th of July. I mean, it feels like that. But luckily, BMC has managed quite well, and we haven't seen that kind of waterlogging at least, despite it's been raining quite heavily. So yeah, I'm safe, and I'm sure that most of the Mumbaiers to be safe, and BMC is doing good out there. So hopefully rain basically slow down so that normalcy returns. And as far as markets are concerned, Nandita, I would say that 25,000, yes, for this weekly expiry, this seems to be a level wherein there has been good amount of resistance. In fact, the previous swing high is 24,950, Nandita, and 25,000. So to round off. So this level definitely will act as a hurdle, above which you will see a sharp move until 25,200. Right, but then failing to surpass 25,000 might just end this weekly expiry, at least in tomorrow. It ends the weekly expiry between 24,700 to 25,000. But eventually, I think it will go up to 25,200 to 300. I mean, this bounce back or retracement will happen until the levels of 25,300. On the lower side, the level to watch out, Nandita, is 24,600. I mean, till those levels are held now, you can assume that the short covering may still happen. But below 24,600, one should not at all expect any further short covering. Whether it would be a complete trend reversal, which can lead Nifty to fall until 24,000 as well. So I would say that till 24,600 levels are held on Nifty, I mean, one can safely assume this bounce back to continue. Now, the IVs haven't bounced back or have not even fallen much. They have been going sideways now, but they're still at the lower end. We haven't seen that kind of buying interest coming from the FI. I mean, you see the gap up opening on Monday, and FI bought less than 1,000 crores. Although yesterday, there was a buying, but then FI did not participate in the buying, and there was a selling of around 600, 650 crores. So that FI short covering is not happening much, Nandita. Until that
Hmm.
doesn't happen, you will not see market, in fact, going up very sharply. So that one day of a strong buying on FI will clearly give you an indication that, okay, this trend will further go up. So that's how it is. I mean, otherwise market might just remain sideways or move up gradually, very slowly.
Hmm. Okay, of course, we need to see short covering from FIIs as well, meaning it hasn't really happened in a meaningful way yet. Although I think some shorts did get covered, so to say. But what about the Nifty Bank Index, Jay? Hasn't really fired up, relatively underperforming other sectors. On the one hand, you have banking that's not really firing up. You had some private sector names under pressure yesterday. But on the other hand, you also have autos that are firing up, and how? Because there's been a spate of good news, so there's reason to cheer. But any thing that you'll be watching out for on these two indices?
Auto definitely looks positive. We were bullish on auto, and I think it can still perform quite well. I mean, see, Nandita, some next quarterly numbers might take a hit. Next monthly sales numbers might take a hit because of this announcement that it's going to be a Diwali bumper kind of a thing. But then if they manage to provide the discounts right away, then I think that would not be much of a difference. But the auto eventually, from 3 to 6 months point of view, it really looks positive. I mean, stocks like M&M, Ashok Leyland, Bajaj Auto from these levels, I mean, provide a good risk reward. Maruti, of course. I mean, but then they have run up quite a lot. So I think, buying on dips makes more sense rather than jumping right now. I mean, selective stocks like Bajaj Auto still offers you a good risk reward. So there is where one can actually enter that. And as far as banking is concerned, Nandita, I would say that, the changes which SEBI has proposed as far as the
Hmm.
weightages in the indices is concerned, that might trigger some selling pressure in the, private sector banks and those who are having, I don't know, I mean,
Hmm.
having high weightage like, HDFC Bank. So HDFC Bank has around 29% kind of a weightage. And those
Hmm.
banks like Kotak Bank, which doesn't have much kind of a weightage, might, see some, inflow. So net around there are
Hmm.
45 to 50,000 crore, kind of mutual fund exposure overall in the banking, specifically
Sure.
to thematic, I would say thematic. And
Sure.
if
Got your point,
HDFC
Jay. Yes, got your point, Jay. Just looking at how we've opened up on the back foot as was expected. But let's see whether we can snap out of this early trend of weakness and edge back into the green. But it's a quiet start, just about 30 points down on the Nifty 24,951 is where we are at. Sensex as well down somewhere around 90 odd points. The mid cap index, last I checked, was managing to hold out in the green. Yes, it is, kind of extending its streak of outperformance vis-a-vis the benchmarks. The bank Nifty also on the back foot as we speak. In terms of the NSE advanced decline ratio, it is in favor of gainers as we speak. 11, in fact, 12, 16 advances to somewhere around 630, declines. So yes, in terms of breadth, it is skewed in favor of gainers at the current juncture. And in terms of sectors, of course, as I mentioned, uh, banks have started on the back foot, but let's see what the other sectors are doing, especially the likes of auto, FMCG, even IT for that matter. It edged back into the green yesterday. Today, I think I can see more of red on the screen, although autos are holding on to the green zone. Marginally in in the green, the auto index. But if you look at FMCG, that's slipped into the red. It's down 0.2%. You have Pharma extending losses as well. All three sessions this week, the Pharma index has been in the red. Remember last week, it was the top sectoral performer, but it has come under a spate of profit taking. But some sectors are managing to hold out, the likes of IT, marginally in the green, even metals for that matter. PSU Bank Index was one of the top performers yesterday, extending those gains, although private peers not doing all that well. So all in all, a mixed picture, but very slim cuts or gains, on all of these indices. So we'll have to wait for things to really settle down to really call it a trend, so to say. But in terms of the movers, then let's take a look at which are the stocks that are doing well. It's Bharti Airtel, as I was mentioning at the start of the show, they have done away with that 1 GB data plan. So yes, tariff hikes in a way taking place across telecom, which is why Bharti Airtel is among the top gainers. Remember, Jeffries has also come out with a report, and they have repeatedly been saying that Bharti Airtel is their top bet from the telecom space. So yes, that's one counter, gaining somewhere around 1.5% in trade. NTPC is the other one that's gaining. BEL, Bharat Electronics, defense stocks are in focus after the government ordered to HAL. So BEL also rub off effect. Sun Pharma, defying the weakness in Pharma Pack, that's among top gainers. Eicher Motors, Infosys in the green, Nestle, Hero Motocorp, Maruti, IndusInd Bank, Eternal extending gains as well. Coal India and Tata Consumer, these are some of the other movers. On the flip side, Some tech names were dominating the laggards list. Tech Mahindra, you have HCL Tech, Reliance Industries coming under profit taking after yesterday's solid gains. Remember, it was a top contributor to Nifty's gains yesterday. Shriram Finance, Kotak Mahindra Bank under pressure. Dr. Reddy's remains under pressure. Tata Steel under pressure. HDFC Bank, SBI, all of these counters in the red. Uh, Jay, looking at the market open, let's first talk about some of these defense names, right? HAL, BEL, etc. HAL, of course, in focus, given the fact that Cabinet Committee on Security has approved purchases of 97 LCA Mark 1A fighter jets, and that's for 62,000 crore rupees. And this will be from HAL. Now, UBS has also come out with a report. It has a neutral call target price of 4,900 rupees on an HAL. Uh, does it excite you now? These stocks, HAL, BEL, they, had a great run. They saw correction. Once again, some bit of traction, in some of these names. Would you look at these names at all now?
You
I
know,
think there's some audio
defense
issue. Oh,
stocks.
yeah,
And
sure.
if the and the defense, in fact, index fell from 9,200 to say, 7,500 approximately, Nandita. So there was a good amount of shorts that was not built up in defense names. And now I think, you see this short covering happening across defense. I think the index itself is likely to bounce back to the levels of, say, 8,100, 8,200. Right now it is at 800 approximately. So 7,790 Nifty Defense Index. So I think 8,100 to 8,200 levels can't be ruled out there. And I think overall defense names are likely to see a good bounce.
Hmm. Okay, defense stocks likely to see a good bounce, but there's another stock that I want to talk about. It's Aurobindo Pharma. I think they have announced some kind of acquisition. They're closing in on a $5.5 billion Zentiva buyout, Prague-based generic drug maker. Now, this, of course, I think the stock is down somewhere around 2.5-3% or thereabouts. Uh, any thoughts on how to navigate an Aurobindo Pharma from the Pharma pack? Because this entire week, Pharma has been under selling pressure. Although last week it was among the top sectoral gainers. For Aurobindo in particular, hasn't been a great time. If you look at the last 1 month, the stock has shaved off 7%. Last 5 days, it has been quite lackluster. Do you expect sideways moves to continue in Aurobindo, or would you say that there could be further pressure on this particular counter?
I see that there can be some, good bounce back. There can be some good bounce. I mean, it's too oversold right now, and Aurobindo Pharma especially has a good support around the levels of 1,000. So till 1,000 levels are held, Anita, I also Auro has a good chance of a bounce back at least till the levels of 1150.
Hmm. Chances of 1150 kind of levels on Aurobindo as well. It has the potential to bounce back as well. Talk about some of these online gaming companies like Nazara, Delta. Any thoughts there? Because yesterday they were all perked up. Today, of course, sentimental impact, 5% down on Nazara, and that takes the last 5-day move to 7% cut. Uh, is it time to steer clear, or would you look at these some of these names as trading bets?
Kind of, the bill that has been likely to do and prohibit this, money transfer as far as, playing games with money. If that's going to be prohibited, then definitely it is going to impact these stocks negatively, especially, I would say Nazara and Delta as well, definitely. But then, I think overall Nazara now has broken technically a rising wedge pattern as well, Nandita, and now the support is directly at 1250 levels. So at least 1250 levels can be seen on Nazara. And as far as Delta is concerned, I mean, see, this stock is already quite oversold. It has been falling down only. So there is no such upward movement in Delta Corp. I mean, this is not in flavor at least since 2022, right? So
Hmm.
Nazara has been rather, has been trending or maybe, trading differently or conversely, whereas Nazara bottomed out in 2022 and Delta peaked or topped out in 2022. So I think Nazara is likely to see that reversal more as compared to Delta Corp.
Hmm. Okay, expect a more impact on Nazara rather than a Delta Corp. That's the view. But let's talk about one counter that exited the F&O ban list yesterday, PNB Housing. It's sorry, I beg your pardon. It saw a good bounce yesterday, and that took the 5-day move to 5.5% also. But the stock has seen quite a bit of pressure, right? In the last month or so, it has shaved off 25%. But yesterday's move, does it signal any kind of a reversal, or would you say that that was just like a one-day wonder?
No, it's the short covering for sure. PNB Housing, LIC Housing, you see, Nandita, I mean, Nifty Realty itself seems to have, bottomed out for the short term, I would say. Not, I don't know about, the longer term right now yet, but then, see, these are the sectors which are too oversold as far as, if you name in financial, then housing financial companies and realty pack. Now, if you see both of them have actually been falling since quite long now, and we have seen good shorts getting built up in both of these segments, whether it is Nifty
Hmm.
Realty Index and housing finance companies. Both of them seems to be reversing, forming a good base and are ready for a short covering. Either we have seen bit of coming in DLF, maybe Phoenix, Oberoi, Lodha for that matter. But then it's still likely to continue. I mean, see, as I said, Nandita, that this rally will take or fuel further momentum only beyond 25,000. And once FI money is back, till then you will see a gradual or slow move. So that upward or short covering could be slower rate at a slower rate relatively. Hence, jumping at whatever levels you see would not be advisable until 25,000 levels are not taken off. But yes, I would say that things are quite oversold in these two segments. Hence, the short covering is expected in PNB Housing Finance, LIC Housing Finance sort of names, as well as Nifty Realty Pack.
Hmm. Okay. That's the view then. Was the sector was actually quite oversold and now expect a bounce. But let's talk about a PG Electroplast as well. It came out of the F&O ban. Of course, the stock has shaved off quite a bit post earnings, 35% in a matter of 4 sessions, and half from its 52-week highs, literally. But of course, after the GST rate rationalization news, we've seen a good bounce. And today as well, it's trading in the green. Uh, Good time. Would you say that this stock was also pretty oversold, and now the kind of moves that we have seen in the last couple of sessions, do you think it puts it on course for a good breakout move?
Breakout is too far, Nandita, for this stock. Frankly, I mean, the kind of sell-off which we saw has had definitely got this stock into the FNO band, and then as the prices settled down at the lower end, we saw a short covering happening due to which the open interest came down, and the stock has come out of the band. And see, coming out of the band clearly indicates short covering in this stock, right?
Hmm.
And which can further continue as well until the levels of probably 600. That is where the the retracement levels comes to, as far as I see the previous fall. So 38% retracement comes to approximately 600 levels. So that is the level you can expect. But a breakout is too far for me to say that whether the stock is bottomed out from a
Hmm.
medium to long term perspective. So 600, at least 10% move from your own cannot be ruled out. For that, on the low side, now the support is directly at 500, 520.
Hmm. Okay, that's the view. Breakout move is still far out, but the stock may have bottomed out. That's the call on a PG Electroplast. But let's shift focus to viewer queries then. And I can't see a lot of queries. Viewers, you can't be not sending queries and then complain if we are short of time and not or unable to take them. So please keep your queries coming. We'll get Jay to answer them. Let's start with a query on L&T Finance. This stock has had a very good run. This query is coming in from RG. The stock is up somewhere around 56% in the last 6 months. Yesterday also it saw a good move. Last 5 days, we've seen a 7.5% kind of an up move. Today, of course, some bit of a breather. How would you approach an L&T Finance? The stock, in fact, hit a fresh 52-week high today.
L&T Finance definitely, Nandita, I would say that has been trending higher. And, this is one stock. I mean, few of the financial names. So housing finance has been down, but then few of the financials in L&T Finance for that matter, Manappuram Finance related to gold was going up. Muthu was doing good. And then we saw, stock like, Bajaj Finance and Bajaj Chola Finance bounce back recently. They were actually seeing selling pressure. But then, Aditya Birla Capital has been doing good. So L&T Finance definitely has been doing quite well. And the stock has
Hmm.
got a good support around the levels of 210 right now in the near term. So till those levels are held, the rally can extend until 225.
Okay, that's the view on L&T Finance. But let's talk about some of these counters that have been, firing up like a rocket, so to say. A one-way move we've seen in the likes of HLE Glascoat. This stock was up on very heavy volumes yesterday. Today as well, it's up 7.5%. Yesterday we saw double-digit gains. Last 5 days, 20%. Last 6 months, doubled. Uh, is there a trade here? I mean, what are the patterns, chart patterns here?
Sure. I mean, HLE Glass has seen a good recovery, but Nandita, the kind of move which we are seeing in this stock, it was consolidating since couple of trading sessions, but the volumes relative to other stocks in the market are quite low. So I would say that technically it won't work for me to comment on this cherry glass code because the volumes are pretty less out there in this stock. Although we had
Hmm.
seen some days wherein the stock volumes are up to 3-4 lakhs, 5 lakhs as well. But then few days it goes down as down to 37,000, 40,000, maybe 75,000 as well. So volume consistency or continuous increase has not been seen in this kind of a stock. And so, although there has been a technical breakout beyond the levels of 496, 500 levels, but then how much to rely on the same with low volume stock is difficult to say.
Hmm. Okay, that's the view then. On HLE glass coat. But let's shift focus and take up more queries. Want to take up a query on Ola Electric from Naveen. The stock was fairly upbeat yesterday as well on the back of source-based news that China was looking to lift the rare earth magnet curves. That's of course a key raw material for EV makers, a key input for EV makers. Anybody holding positions in Ola, what should they really do? Should they add more or should they take some profit off? I mean, how would you look at Ola?
See, Nanita, after the quarterly numbers were announced and the stock had seen that kind of a rally, which helped the stock to move to the levels of 49. And then again, it got sold off. Despite the auto stocks overall reversing quite well, this did not. But then with GST announcement, definitely this stock bounced back. So the prices definitely, from the price perspective, the demand can be seen, which can help this stock to move to 40, to 55, 60 levels. But for me, I would say for this stock to really perform quite well, it has to surpass the levels of 60. That is a very critical level. I mean, beyond 60 to 70 range, thereafter there is not much of resistance. It can thereafter climb to 80, 90 levels as well. I mean, during when it had announced the kind of battery innovation which they have done, and the stock had rallied from say I guess from 60 levels to probably 90 levels or 80, 90 levels. So those levels can be seen thereafter. With this GST kind of
Hmm.
announcement by our honorable Prime Minister, I think it has helped overall the auto sector, as well as with this kind of the agreement between India and China for the rare earth minerals definitely can help also the auto names. So with that two things, this can bounce to 55, 60. For me, it would be important for me to see whether it sustains above 60, 65 or not in order to see further
Hmm.
move.
Okay, that's a view on Ola Electric. Naveen, I hope that answers your query. Good to see more queries trickling in as we are coming to a close for this segment, but I'll try and squeeze in as many as possible. I want to take up this query from Mathan Mohan on a Hindustan Unilever. We've seen FMCG stocks, of course, pick up steam. Numbers have also been fairly good in terms of volume growth. The likes of HUL have managed to do well in the quarter gone by, and now with coupled with tax cuts and the whole GST rate rationalization bodes well. We have the eighth pay commission also coming in that boosts consumption, right? And some signs of recovery in urban consumption as well bodes well for these FMCG names. But HUL seen good traction, picking up as well. What are the levels to watch out for here for the near term? And for the medium term, what would you really be working with?
No, I mean, I think that HUL has witnessed a good short covering, and the move can be until the levels of 2,800 or maybe 3,000 levels as well. I think the overall segment looks quite bullish, the consumption index itself. So I like Tata Consumers, I like HUL, I mean, these kind of names, at least in the short term. And I think they are likely to do good. 2,800 are the levels to watch out for going forward. I mean, these levels can be achieved till 2,500 levels are ready. And beyond 2,800, I mean, it can reach to all-time high levels of 3,000 plus as well. So in the near term, 7 to 8% rally cannot be ruled out.
Hmm. Okay, that's a view on HUL. I hope that answers your query, Mathan Mohan. Next query is on a BSC from Kalpruksha. Now, BSC, of course, the rally that we had seen, the counter did take a pause. If you look at the stock movement, hasn't really done all that much last 1 month. Do you expect this pause to continue here on? And in terms of uh, taking positions, I mean, would you look at it as a positional play post the correction?
No. The reason being is, we might see some short covering, definitely, since the stock is in FNO and we have seen good short build-up. So there can be some short covering which cannot be ruled out in any stock wherein we have seen shorts. But then from the overall trends perspective, I would say I would be avoiding BSC now big time. See, SEBI is doing all it can to curb the retail participation in the FNO as much as they can with the help of various measures which they have been doing since 1 year or more than that, which has impacted the overall derivatives volume and might further as well, which SEBI recently announced again, I guess yesterday or day before, that uh, the limit up to the for the participant has to be not beyond 500 or maybe 1,000 crores kind of an exposure or something like that, wherein brokers earlier had actually called SEBI and met SEBI and said that, we would like to have 10,000, 15,000 crore kind of a limit. We would not be okay with this kind of a lower limit. This will impact our overall business. Brokers also said the same thing. But then it was, thereafter it took a pause of 3 to 6 months, but then it's back. So all I want to say is
Hmm.
maybe that, the weekly expiry thing, which, SEBI is
Yeah.
planning to, close and, get only monthly expiry to index. That's it. So these all things are not favorable. I mean, BSC, the kind of run-up which we had seen was most, I believe, on the back of kind of FNO participation, which had increased in Indian market, Indian derivative market, as well as, with the closure of these, competitors' weekly expiry like Bank Nifty, Fin Nifty, Midcap Nifty, we saw more of traction
Hmm.
coming into these sensex derivatives. Now, I'm not sure
Hmm.
that how far, the finance ministry, the RBI governor, SEBI, all of them are with respect to, the retail participation in FMO. I'm sure they are doing for the good only for the retail participants of India. I'm sure very much to save the money because the losses were more than 1 lakh crores, and which is
Hmm.
definitely a signal to take further steps. Until we don't see that coming down, the steps to be
Yeah.
taken by SEBI as far as derivatives, that will not stop. That will continue. Till we don't see from 1 lakh to 70,000 or 50,000. I mean, till then they will continue doing this. So how will it help this stock?
Got your point. Wouldn't really look at it as a positional play at the current juncture, given all the regulatory news flow and what the regulators are doing really. But let's quickly get in two, three more queries. I'll go as fast as I can. I can spot a query on Indus Towers from Alex. What's your thoughts on how to look at this particular counter? The whole telecom pack is a buzz, right? Them changing their base packs, the 1 GB data, doing away with that. Some bit of a price point change, right? So, how would you look at telecom and particularly for Indus Towers? If somebody wants to take a
Yeah.
bet here.
I think Indus Tower is likely to see some bounce back. I mean, see, next month probably, I guess, there is a due of AGR by Vodafone Idea as well. I mean, and it might ask the government to it might seek some help from government. Let's see what happens out there. I mean, they have come down most of the telecom names. like Jio and Bharti, both of them have stopped their lowest plan and moved one notch higher. So that will definitely help to increase their ARPU, which will positively impact their bottom line. So I think most of these telecom names are going to do good now in the short term or medium term. And Indus Tower, wherein we have seen some short positions getting built up, and the stock has been consolidating for a long time between 300 to 400. Now is likely to bounce back to 400 because it has come down to lower end. So at this lower end, I would not like
Sure.
to, let's say, exit until 300 levels are not. Right. So it has reversed from the lower end, might bounce back till the upper end again.
All right. That's the view, and those are the levels to watch out for. Last query, really. All the others who are sending in your queries today, please, try and send them tomorrow, because we don't have much time. So, we want to take up a query on the hotel space. ITC Hotels, is it a good investment bet? That's a query from Anandru Bandopadhyay. Now, Hotel Pack post this GST news has been doing well. A lot of analysts we have spoken to have said that hotel space is looking good for investment, the likes of Taj GVK, so to say. But how would you compare? I mean, would you look at an ITC hotels from the space, or would you look at some other names like Indian hotels, chalet hotels, or any other names? If
Yeah,
somebody wants to take a bet, which one would that be?
yeah, yeah. Yeah, I mean, maybe, Chalet Hotels has been doing good. Definitely, I think, ITC also relatively looks good. I mean, still there's much value left here. I mean, see, overall hotel space is looking positive. I mean, from the FNO space, it has been an Indian hotel which we track quite closely, Nandita, and that's too also in the short term. And I think the way it has provided a breakout beyond the levels of 780. So I think from the FNO perspective or derivative perspective, I think Indian hotels is definitely likely to inch towards 850 till 750 levels ahead. So you see, I mean, you see a 60 rupees upside wherein you have 40 rupees downside. So you've got a decent risk reward of 1 is to 1.5 in Indian hotels. This can't be ignored. And from the non-FNO names, I think, ITC hotels is one second bet wherein I would say that yes, it will positively help kind of, the reforms, GST reform, which is yet, likely to come from, this festive season, Diwali mostly. So that will help
Hmm.
the overall hotel space. So I don't know if it moves from 18% to 5% or what. Uh, but yes, these names are likely to go gain some benefit. And my top pick would be Indian hotels and ITC only. And third, if I have to consider, it would be Chalet for sure.
Okay, all right, got your point. I hope that answers your query, but we've run out of time when it comes to the query segment. All those queries that we couldn't address today, make sure you send them in tomorrow as well. We'll get them addressed tomorrow. But with that, Jay, before I let you go, any recommendations for our viewers?
Sure. I mean, one more thing which I would like to say, Nandita, which I actually missed out before I give my picks is that lemon tree as well has been, consolidating quite since quite long between 160 to 110. So I think, I mean, in that form, it has created or formed a good ascending triangular pattern. So if you see a breakout beyond 160 on lemon tree, I mean, you will quickly see this stock outperforming all the other hotel names. So this also can be kept on radar. And beyond 160, one can see 200 plus levels technically. And as far as the stocks which I like, as a disclaimer, first of all, I would like to say that we have recommended this to our clients in a form of option strategy. But I like DMart. I think it's heading towards 5,200 to 5,300 levels in the near term. I mean, the indicators are already is having positive. We have seen a good long build up here as well from the FNO perspective. So this is one stock which I like, DMart. And as I said, and as a disclaimer that we have recommended this to our clients. So that is what I like. From the pharma names, if I have to pick one, Nandita, then it would be looking wherein I think there can be some bounce back. So it can bounce back till 2,100 levels in from a medium term perspective. So that could be a buy or dips. 4 days pharma is underperforming. As a disclaimer, we have recommended option strategy to our clients on this as well. And other names which is likely to benefit is the insurance space from the GST, Nandita. And I think if that moves down from 18% to 5%, and maybe, if zero for senior citizens or
Hmm.
all of us, it would be really good. So, as a disclaimer, we have recommended this sector and stocks to our clients as well. And Policy Bazaar, among that, seems to be a good beneficiary. It can head towards the levels of 2,000, 2,050 as well. On the downside, 1850 is a good support. So, Lupin, Policy Bazaar, and DMart, of course. I mean, these are the few
Hmm.
names one can keep an eye on. And the rest, auto and hotels is what we have already discussed, which are looking positive sectors.
Sure. Sure, of course, those recommendations and of course autos, etc., looking good on the back of GST push hotels as well. But with that, Jay, always a pleasure chatting with you and getting in your thoughts. Look forward to interacting with you again. Wish you a happy trading day
Likewise.
and stay safe.
Thank you so much, and I wish you a good day as well as be safe. And I wish all the viewers of Money Control as well to take care, especially those who are in Mumbai. And thank you so much for inviting me, and it's always a pleasure. Thank you, Nandita.
Thank you. Well, that was Jay with his thoughts. Also helped our viewers navigate their stock-related queries. We'll get another expert to address all your queries. So keep your queries coming in tomorrow. Apologies to those who we couldn't address today. But on that note, we're waiting for our next guest to join in. But let's take a look at what the markets are really doing at the current juncture. Well, no change really. We are still in the red. Look at the Nifty that's down somewhere around 20 odd points. The Sensex is also down somewhere around 15 points. So not doing much. But the bias is towards the downside as of now. Let's see whether we see some bit of reversal because yesterday as well we had a pretty quiet start, but we did pick up steam. So we are hoping that that would be the case today as well as we are heading to the weekly expiry session tomorrow. But mid-cap index has also slipped into the red. The advanced decline ratio is even Stevens, 1:1, but the texture is more towards the laggards. So the breadth is, as I said, even, but the breadth is skewed towards the laggards. Okay, in terms of losers, then I think it's a street NBFC space like Shriram Finance, Bajaj Finance extending losses, Hindalco, BEL. Tata Motors has also slipped into the red after doing well yesterday, but what's holding out are names like Infosys. That's a top Nifty gainer. Bharti Airtel as well. It has discontinued its base to 49 rupee plan. Comes close on the heels of Reliance Jio also discontinuing the 1 GB prepaid pack online. So yes, a lot's happening on the telecom space. But on that note, let's bring on board our next guest for today. Joining me is Kranti Bathini of Wealth Mill Securities. Kranti, first of all, thank you for agreeing to do this interview at the very last minute. Always appreciate your taking out time and joining in. But let's
Thank you,
start
Nandita.
with,
Always my pleasure.
sure. Let's start with the biggest news that came in yesterday. There's been like some thaw in India-China relationship, rare earth issue being resolved, and both the nations also agreeing to start direct flights, etc. Now, we did see a good rally in the entire auto and auto ancillary space, which was already buzzing on the back of the GST rate rationalization. Now, the rare earth curbs, being lifted. That was, of course, one of the talking points between India and China. How much of a boost do you think that would prove to be for the EV makers? So, should one prefer EV makers or ICE vehicles? How would you look at the entire auto space in the wake of all the tailwinds that are coming in?
First thing, Nandita, we need to consider two things for especially what are the benefits auto sector is going to derive with respect to the bilateral ties that has been building up between India and China. First of all, we have a notion in our minds always China, we treat them as the nearest competitor to us. Of course, in many of the sectors, they tend to come as a competitors to us. And when we think about them as one of the complementaries and substitutes for us, there can be a lot of benefits because of China in the past 15, 20 years. They have done enormous progress in terms of the as a global manufacturing hub where India has missed. But of course, we are quite strong in services. Now coming to the developing bilateral ties between the bonding between India and China, it offers one thing is the comfort in the borders and coming to the trade ties are concerned, trade bondings are concerned as one of the key concern for every one of the automakers across US, Europe, and Asia. the rare earth minerals are concerned. So now, with the strong bonding that has been taking place at this point of time, that will ease the supply chains, and Indian OEMs can have much edge when compared to European or any other supply chains and OEMs are concerned. That will definitely benefits Indian OEMs in the medium to long term. And also the GST, when we buy auto OEM in India, one of the key beneficiaries are every sector, every government, number of taxes starting from outright GST, and the one of the highest weightage on auto is OEM is concerned, any car is concerned, highest 40 to 45% goes uh, towards the taxes. So any ease of GST can be a big booster. That's why we can see some kind of a strong bounce back coming to auto sector is concerned. And the second part of
Hmm.
your question, whether you choose ICE or EV is concerned, of course, the current the global mood is concerned. There seems to be going with respect to the policy of global environment is concerned. Slightly, we can see some kind of a consolidation in terms of the EV space. Of course, there is a long way to go, but in the medium to short term, we can see some kind of a sense of consolidation in the global EV space is concerned. While coming to India, still the EV space demands for the infrastructure one hand, the other hand is the policy subsidies that has been weighing on the EV space is concerned. By and large, there is an ample scope for EV in India. The numbers are still at a minuscule. The infrastructure spends has to be increased over a period of time. The concern is, if you have to go for a long drive, where can I search for the charging? These are the charging infrastructure. These are the things
Hmm.
that has been weighing on the infrastructure, but we're in a better way. As still the EV space is at a budding space. There is a ample opportunity in the EV space, and allied accessories companies are concerned in EV.
Sure, of course, the EV penetration, of course, that remains an overhang. Of course, charging infrastructure, etc., need to be spruced up. But let's talk about one pocket that's expected to see a big boost because of the GST rate rationalization. That's the entire consumer durable space, particularly the AC makers. Till now, AC makers have suffered, right? If you look at the earnings as well, and that was largely because of lower room AC sales, lower demand for that in the wake of early onset of monsoon. Now, of course, this GST rate rationalization will come as a booster, but seasonally things won't really change, right? If you look at the real reason why sales took a hit, that remains the same. So, in that sense, how do you see things play out for some of these AC makers, the likes of Voltas, Blue Star, even PG Electroplast for that matter?
One is the white good makers, and also the back end compressor makers are concerned, like the
Hmm.
PG Electro and names like Amber and all. Uh,
Hmm.
in the medium to short term, what we are seeing is some kind of overhang because of the climatal issues. Indians have a typical tendency, when there is a heat only, they try to think about the buying a AC. The extra sales are concerned. That's where the overhang on these companies on a medium to short term. But in the long-term prospects are concerned, it's not a business to just gaze for a quarter to quarter or a year to year. The long-term prospects are concerned. The disposable incomes are going up in India. So earlier we used to have a single AC for home. Now it has been roaming, entered the kitchens also. So due to the increase of the global warmings and temperatures, so there is a long headroom, Nandita. There might be some kind of a short-term bumps, blips would be there in terms of the sales numbers are concerned. But for a long-term investor, if the investors have a 3 to 5 years horizon, any correction in the stocks, definitely it gives a good entry level for the investors because of these short-term overhangs. GST can be an extra bonus for these companies.
Hmm. Okay, that's the view. Thanks for putting that into perspective, Kranti. But one other pocket, since we're talking about the GST rate rationalization, another pocket that's in focus is insurance. there are chances of insurance falling, I beg your pardon, GST rate falling to 5% or nil. At the onset, it looked like a booster, but insurance companies are of the view that since 5% or nil GST would not give them access to input tax credit, that would be an overhang in terms of cost. So in that light, insurance companies are expected to approach the finance ministry and urge the ministry to not tinker with rates. That's source based. But how do you see this whole dynamic play out for insurance as a whole?
As you rightly mentioned, the initially the market pursued just like it's going to be a positive, but as the input credit overhang, that is one of the key for the any of the companies getting the input credit also one of the essential. Uh, so that can be we need to wait and watch how the GST Council and the Finance Ministry going to take up this issue. But most and probably the insurance products are by and large the protection plans, okay, and we tend to see some kind of under penetration, but the urban and metro sales for these insurance companies as the saving products or protection products are concerned, we are in a consolidation phase. The penetration has been one of the highest in the recent past, but given the kind of the young population we have, around 43 crores of the population is between less than 40. So that's where the key opportunity for these companies. One thing is what we are witnessing is the digitalization of savings and also the protection that gives extra edge on these companies. So for a longer term perspective, even though the medium to short term, some kind of a consolidation, what we witnessed in the recent past with respect to the insurance stocks are concerned, insurance as a sector is concerned, and there is also the sectors is emerging into one is the health and protection and saving. So there is a complete division in the insurance sector. So the individual sectors will thrive. The health protection, which is also the general insurance, also is there in the space, and also the savings. So savings might be what we are witnessing is there was a ULIP flavor saving through insurance that has been slightly subsidizing. That savings has been moving towards mutual funds and direct equity in the recent past, what we witnessed
Hmm.
post-COVID. But health and protection going to thrive in the coming years. So there is a greater opportunities on a longer term perspective. The medium to short term, these kind of overhangs would be there. We need to wait and watch how the GST Council going to take up this issue going forward.
Okay, yes, we'll have to see. And we have the all-important group of ministers meeting on this rate rationalization tomorrow. So that's one crucial cue to watch out for. And of course, we'll also be watching out for the timing of the rate rejig, right? Because this is typically the time when people go out and do their purchases for the festive season. If it doesn't really come by on time, perhaps the festive buying would be delayed. What's your thought on that? If at all it comes by Diwali right at that time, do you think much of those purchases will be delayed?
Yeah, some kind of Indians are cost conscious by and large, and these are not the essential goods. So, can people can wait for some more time to get the price reductions. And Nandita, and in autos, there is a dichotomy what we are observing. One is the entry level segment. You will get a lot of discounts, okay, and the automakers are ready to deliver within few hours. But the high end is concerned. Okay, there is a waiting period of 5 6 months, 7 8 months. So these are the divergences are coming. But the as it is pronounced by the Prime Minister, the GST Council can be on their toes to announce as early as
Hmm.
possible. That's where we can see the early reaction in the market with respect to OEMs and all the GST related stocks are concerned.
Hmm. All right. Okay, that was about the whole GST rate rationalization and the themes that would get impacted. But one of the big talking points today is the entire online gaming industry, right? Of course, the government is likely to introduce the prohibition of online game and online money gaming service. Parliament is likely to introduce that bill today. Of course, that would be a big setback for the gaming industry. Also some impact on Nazara Tech could be felt. Just want to put things into perspective. The online gaming industry has paid somewhere around 22,000 crore rupees in taxes. So that's been a good source of revenues as well for the government in FY25. That's the figure, and 5,000 to 18,000 crore rupees of GST was paid in the last fiscal, and 3,000 to 4,000 crore worth of TDS was also paid in FY25. Not sure how much of exposure some of these names like Nazara have to real money gaming, but your thoughts, because there's a whole 40% GST on online gaming as well. So how do you look at this industry, and what would your call be on stocks like Nazara in that sense?
Nandita, first and foremost is look at the astronomical numbers, the tax collections and GSTs and all. That shows the appetite of Indians towards this online gaming and the focus and how people are looking. Of course, there are some controversies and in this entire space. So government want to rationalize and restrict and regulate this the entire space. As and when there are regulators coming to the picture, when there is a framework that do comes, okay, the organized players tend to get benefited over a period of time. We need to see the final draft of the bill at this point of time to look into that, and some kind of a controversies around this online gaming and all, and people have been there were a lot of controversies around this thing. That is the reason government want to completely revamp and regulate that entire space. By and large, whenever the regulator comes into the picture, when there are draft guidelines, the organized players who are with the spirit they are doing, they are going to get benefited. We need to wait and watch how this entire space, due to this bill, it's going to come up at this point of time. But
Sure.
it shows one thing is how much the opportunity that is there for equities. If this kind of money can be coming to best part of investing, that also can boost the equity volumes in the coming years. That's what the digitalization is taking place at this point of time in India. The digital revolution we can completely witness in this online gaming.
Hmm. Point taken, Kranti. Running out of time, but I want to get in one or last couple of questions with you. We had a query on our feed, largely on the IT space. So, Mahendra Sarkar, I don't know if he wanted a technical view or a fundamental view, but let's get him a fundamental view on this. He has exposure to names like Infosys and TCS, and he wants to know whether he should exit and book losses, or is there any turnaround expected. My question to you is how should one be placed in the IT stocks? One be more tilted towards BPO, or should one be more tilted towards ER&D, where earnings I think were a little better than the rest of the pack? And how should one really look at the AI theme, especially when one is an Indian investor?
Nandita, one thing is at this point of time, the IT space in a consolidation phase. And given the kind of the previous 20, 25 years, how the Indian IT companies, the bellwether company could able to sustain. We have witnessed the TMT bubble in the back in 2000, technology, media, and telecom. We witnessed the great financial crisis, the GFC in 2008, and we witnessed the COVID, the extraordinary events in the past 2 decades. But these bellwether companies could able to sustain these kind of moves. Now they are facing a different storm. The US protectionism and the tariffs are concerned, that has been creating some kind of overhang on the IT companies. The narrative has been quickly changing. Just 3-4 months back, we are talking about the US exceptionalism and the US growth path. Now we are talking about one hand overhang on the US economy. That's what creating overhang on the Indian IT companies, which are the by and large the service providers. Uh, just to take a contrarian view, uh, uh, for a longer term investors, definitely these companies are quite strong in their domains. These are the short term headwinds, and Indian IT companies, they missed somewhere innovating them as a technology companies rather than the portrayed as a service companies. That was one of the overhang on Indian IT companies. But still, there is a greater demand for the service industry to come and emerge. They have been shaping up in terms of the AI, and different parts of the AI is concerned. So if I have a time horizon of 3 to 5 years, definitely I can start chipping into IT companies. This is a completely contrarian view to the street
Hmm.
view, not in a single go. Most probably in a staggered manner, every dip, the strong companies I can accumulate for a longer term. This is a complete contrarian view. Only one
Hmm.
thing is, you should not look at quarter to quarter or a 1 year perspective. It is by and large and investors in TCS or
Hmm.
Infosys or any bellwether IT companies, they comes up with a long-term horizon. That was the trend. If
Hmm.
the similar trend, one can buy at dips.
Sure. Taking your point, contrarian view. Yesterday, I had Firoz Aziz also on the show, and he also was taking a contrarian bet on IT. So yes, that's the call. Accumulate in a staggered manner, and that too for the long term. Don't look at it from a quarter to quarter, on a quarter-on-quarter basis. But with that, Kranti, would like to thank you for taking out time and joining in. Always a pleasure. Look forward to our next
Thank you,
one as well,
Nandita.
and if uh, have a good week ahead.
Thank you, Nandita. Thank you.
Thanks a lot. Well, I just want to tell our viewers that we had Nazara Management on CNBC TV 18, and they made some commentary with regards to online real money gaming. They've said that there was no contribution from real money gaming in Q1 FY26 in terms of revenue. They've also said that now their investment in pokerbazi is potentially at risk due to this ban that the government is looking at when it comes to real money gaming. So yes, but they are still saying that 80% of their revenues come from international markets. So they are well diversified in terms of risks. And they will, going forward, double down on their investment in core gaming IP. And in that perspective, they have a pathway for growth, and they will be looking at larger acquisition targets that could go up to 500 to 700 crore as well. But the Nazara Tech, sentimental impact of this whole issue, the stock was down somewhere around 7% last time I checked. On that note, quickly take a look at what the market is doing before I, take your leave. We have edged back into the green, marginally so, 24,981. That's where we are at. The mid cap index is also, flitting between green and red. Sensex also trading in the green. And in terms of the movers, we saw that Bharti Airtel, Infosys, these are some of the names that are leading. Eternal also seeing good buying interest today for a second day on the trot. HUL, NTPC, Nestle, TCS, these are some of the other names that are among the gainers. But some of the NBFC names that saw pressure yesterday, the likes of Shriram Finance, Bajaj Finance, continue to see some profit taking. Tata Motors as well has come under pressure. Yesterday, remember, it was among the top Nifty gainers. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Keep your queries coming in. We will get them addressed by our experts. And of course, stay tuned to Money Control for all your other news and updates. I'll see you with closing at 3:30 p.m. again today. Thank you.